Hi everybody, welcome to our DAT IQ weekly market update. This is our update for September 30. This is episode 356. I'm Dean Croke, market analyst here at DAT. No guest today, so it's a very short market update. A couple of key things we're watching. Of course, end of the month, it's the last full shipping week before the end of the quarter, end of month. Spot rates up, no great shock there. We'll dive into that a little bit later in the market update. ATA tonnage came out. Tonnage was up about almost 1%, up about 0.4% compared to the same month last year. Bob Costello, chief economist at the ATA, said that while he'd like to predict a strong rebound in freight levels through the upcoming holidays, he said he can't. He believes traditional seasonal patterns are off this year as shippers adjust to tariffs. He also said that housing remains soft. The slowing labour market is likely to show up in consumer spending at some point. And most manufacturing metrics are either decelerating or declining. Preliminary interstate for-hire carrier authorities returned to negative in September, losing about 814. Now, these are preliminary as of today. We'll have another data dump tomorrow, but it looks like we'll have more carriers leaving than joining for the month of September. Carrier exits so far this month, we've seen about 4% more carriers leave compared to the prior month. Also, there's about 36% more carriers have left this September than last September. But we'll know more tomorrow once I round out the full month's numbers from the FMCSA. Atlantic hurricane season, according to Weather Optics, the statistical peak of hurricane season is mid-September, so we're past that. History shows that some of the most impactful storms occur from late September to October. So we're still in the peak season, but there hasn't been a lot of activity so far in terms of tropical weather in the Atlantic hurricane season anyway, but it is starting to ramp up a little bit. Humberto is swirling about 450 miles off the coast. It's moving to the east. Hurricane Imelda is currently working its way up the east coast. It's causing a little bit of activity right now as we speak, but things are eerily quiet right now. Of course, this week we'll see some data dumps later in the week from the Institute of Supply Management. The ISM PMI is out. That'll be very important. Also, the second data dump from the Logistics Managers Index to see whether the transport indices for capacity and prices continue their inversion and whether we're headed deeper into a freight recessionary period. That'll be very interesting to see what Zach Rogers has got there. Let's dive into our freight market update for the week. Start with some of our load to truck ratio numbers. The heat map up there, we'll dive into some of the data points around the Midwest markets in Illinois. But nationally, load posts rose by about 4% last week at month end. Just over 1 million load posts in dry van, up 25% over last year. The surge combined with a 12% decrease in load posts or equipment posts, we saw a slight tightening in capacity. Dry van load to truck ratio settled at about 6.70. In Illinois, brokers observed some very tight capacity on regional lanes last week. Load to truck ratio in the Illinois market averaged 4.0, peaked at about 6.0 midweek. In outbound Chicago, load posts climbed 15% week over week, pushing spot rates up 4 cents a mile to an average of $2.60 per mile for carriers. Long haul lanes to Atlanta, outbound Chicago, saw an average of $2.18 per mile last week. That's about 15 cents a mile higher than this time last year. In the refrigerated market, national load posts were up 2% last week, leading to a significant 35% rise compared to this time last year. Despite that volume growth over last year, volumes remain consistent, though, with week 38 volumes going back to pre-pandemic years. The end of month brought tighter capacity, though, evidenced by a 12% decrease in equipment posts. Load to truck ratio ended the week last week at about 11.39. Having a look at some of the busier markets, Allentown experienced very tight capacity last week. It's a significant reefer market on the East Coast. Load posts are up 11% last week. The average spot rate out of that market was $2.09 per mile. Load to truck ratio in Allentown averaged 19.7 for the week. It did peak, though, at 27 loads per truck last Friday. Capacity was particularly constrained on the regional lane to Boston. Reefer spot rates jumped 14 cents a mile to $4.07 last week on the Allentown-Boston lane. Having a look at the flatbed market, load posts were up about 1% last week after 3 weeks of increases. a decrease last week after 3 weeks of increases. Equipment post dropped about 8% last week. Flatbed load to truck ratio up to 27.97. In the southeast region, Birmingham experienced a 17% increase in load posts last week. Average load to truck ratio was 17.4 for the week. Outbound spot rates climbed 5 cents a mile last week in Birmingham, averaging $2.59. That's 13 cents a mile higher than this time last year. However, in Birmingham, capacity loosened on the highest volume lane in terms of loads moved. That was to Lakeland, Florida. Spot rates fell 6 cents a mile, averaging $2.73. Remember, all of these rates are excluding fuel, so they're line haul only. Having a look at our year-over-year look at spot rates, line haul rates nationally, this is our 7-day rolling average, increased 2 cents a mile at the end of the month, averaging $1.67 per mile. It's about 5 cents a mile higher than this time last year. On our top 50 lanes, based on the volume of loads moved, they were up about a penny per mile last week, averaging $1.98. That's 31 cents a mile higher than the 7-day rolling average spot rate. In our 13 key Midwest states, which represent about 46% of national load volume, also one of the key regions that indicate national trends, spot rates were flat last week. Carriers averaged about $1.87 per mile. That's 20 cents a mile higher than the national 7-day rolling average. In the refrigerated market, for all temp zones, 7-day rolling average, carriers were paid $2.01 per mile at the end of the month. That's up a penny per mile. That's about 4 cents a mile higher than this time last year. The USDA reported an adequate supply of trucks in all 13 growing regions last week. For fruit and veg specific loads, the average reefer rate was $3.70. That was down 2 cents a mile last week, but that's about 15 cents a mile higher than last year, and that's for the week ending September 23. And then lastly, in flatbed, flatbed rates were up nearly 2 cents a mile last week. Remember, these are excluding fuel. Flatbed carriers were paid an average of $2.06. That's the 7-day rolling average, 2.06. That's sitting about 11 cents a mile higher than last year. That's where it's been pretty much for the last 3 or 4 months, sitting about 18 cents a mile higher than in 2023. It's also about 5 cents a mile higher than where it was in 2017. Remember, we've been talking about this compared to 2017. That was a year characterized by a really robust industrial economy. For flatbed carriers, we're monitoring this closely. This trend, as it appears to be more than coincidental, the further we get into it, may just be coincidental, but it's eerily similar the more we get into this year. Let's have a look at our short-term forecasts. Let's start with dry van. Remember, these are our Ratecast forecasts out 35 days. That's in green. That's what Ratecast is expecting. These are for loads over 550 miles, excluding fuel, higher and lower bands in yellow and green. And of course, the blue line is the historical 7-day rolling average. All right, so in dry van, these are out to the end of October. This includes Halloween, so you'll see a little bit of a lift prior to Halloween, and then it drops off. We're starting to get into the period now where once we get into next week, you'll start to see the seasonal effects of Thanksgiving start to lift these rates once we get into early November. But right now you're seeing the forecast early Halloween lift and then the fall off towards the end of October. All right, dry van out to the end of the month, expecting rates to fall 2 cents. After lifting a couple of pennies in the next few weeks. So it'll expects the end of the forecast range out to $1.65. If that happens, it'll be about a penny per mile higher than where it was this time last year. Low case has rates down 6, high case up 3. In the refrigerated market, again, fairly consistent, rates down a penny per mile out to the end of the month. If we land at $1.97, rates will be about 3 cents a mile lower than where they were last year. So again, that kind of fits the theme for dry van and reefer, where they've been largely the same as what they were in the last couple of years. And in flatbed, rates are expected to end the forecast period at about $2.01, down 4 cents out to the end of the forecast range at the end of the month. If we land at 201, that'll have rates up 7 cents compared to last year. Again, underlining that rates have been relatively strong compared to last year for flatbed carriers. Low case has rates down 9, high case has rates up 1. So I'm expecting by the time we get to next week's forecast, we'll have 1 week of early November rates in the forecast. We should start to see that green line start to have an upward inflection. All right, so that's the end of our forecast for the October period. Brings us to the end of the market update, a short one this week. A couple of shout outs. Make sure you tune into Radio Nemo and the Road Gang Radio each day, 7 a.m. Central. You can catch them on iHeartRadio, Facebook Live, and YouTube. I'll be on with Dan Deegan tomorrow on the Logistics Life on Freightvine podcast. Chris Kaplis is talking to Ari Ash from the Journal of Commerce. Next week's show, Bill Cassidy is talking to us. We're going to talk to Bill about some of the freight market cycles going back over the last 25 years. There's very few people in the industry that can talk about so many freight cycles going back to the turn of the century. It's going to be a really good discussion with Bill. Again, make sure you set up alerts to our live show, subscribe to our channel. With that, another show is in the books. Thanks for watching. Be safe, be nice to everyone. We'll see you next week at 10 a.m. Eastern, 7 a.m. Pacific.